How investment banking facilitates debt and equity financing. Welcome to the Finance Fusion, your clarity code for complex finance fundamentals. Today, we'll decode how investment banking facilitates debt and equity financing. Investment banking is a vital intermediary in the complex world of corporate finance, helping to manage the careful balancing act between debt and equity funding. Professionals skilled at negotiating the intricacies of financial markets are involved in this dynamic process, which aims to optimize capital structures and obtain funding. Investment bankers are essentially in helping companies find a variety of funding sources, providing strategic financing advice and underwriting securities. It is clear from delving into the nuances of how investment banking smoothly enables debt and equity financing that their knowledge is essential to forming the financial plan that propel companies' expansion and viability. Number 1. Debt financing. In debt financing, underwriting debt securities. Investment banks serve as a vital link between corporations and investors, facilitating the underwriting of debt securities. By acquiring the full debt issue from the originating company and reselling it to investors, they take on the risk. Businesses can now raise capital more easily through this approach, which also gives investors access to fixed income assets. The investment bank receives underwriting fees in return for the risk which they have taken. This underwriting process aids businesses in obtaining capital through the issuing of debt and promotes the smooth operation of the financial market. Number 2. Advisory services. Investment bank provides essential advice services to help businesses structure successful loan issues. This entails the strategic advice on choosing the right kind of debt like bonds or loans, as well as figuring out the best interest rates and terms of repayment. Investment bank assists businesses in navigating the intricacies of financial markets, also optimizing their capital structure and securing favorable terms for both issuers as well as investors through their advising function. This tactical partnership improves the effectiveness of capital raising procedures and advances the general prosperity of debt issuance deals. Number 3. Credit rating. Investment bank frequently assist businesses in obtaining ratings from the rating agencies for their credit. These ratings are important since they affect the issuer's cost of debt. Investment bank increase an issuer's reputation and investor appeal by assisting them in achieving higher credit ratings. Because it attracts a wider range of investors, can result in lower interest on debt offerings. A higher credit rating can help the businesses borrow money at a cheaper cost. The investment bank's advisory role in credit rating optimization highlights its contribution to the financial market. Number 4. Debt placement. Investment banks are essential to the debt placement process because they make it easier for institutional investors like insurance companies, pension funds, as well as individual investors to purchase debt instruments. Investment banks facilitate the connection between issuers and a wide spectrum of prospective buyers by utilizing their vast networks and their expertise. By ensuring that debt securities are distributed efficiently in the market, this process enables businesses to successfully raise financing. Investment banks help businesses to achieve their funding needs by connecting investors with appropriate loan offering, hence promoting the debt market success and liquidity. Number 2. Equity financing. In that, there's a first point, which is initial public offering, IPOs. I'm sure all knows IPOs. Regarding initial public offering, investment banks are essential to the process of bringing a business public. By taking on the risk of buying and reselling the shares, they underwrite the IPO by helping to determine the price of the share and then help with the public distribution. Using the knowledge of investor emotion and market dynamics, investment bank offer crucial advising service. So by obtaining money from public investors, this involvement aids businesses in making the move from private to public status. Managing the administrative and regulatory challenges of the public is going another aspect of the underwriting role. Number 2, follow-on offerings. Investment banks are essential in helping well-known public firms obtain more stock capital through follow-on offerings. These banks provide support by facilitating the issuance of additional shares to the public following the IPO. Acting as a middleman, the investment bank sets the offering price, manages the offering procedure, and underwrites the new shares. This makes it possible for the businesses to obtain more capital for a range of objectives including growth, debt relief, and acquisition. Investment banks' participation in follow-on offerings help publicly traded companies maintain their financial stability and expand while giving investors the chance to take part in the further equity offering. Number 3, private placements. Investment banks serve as intermediaries in private placements, putting businesses in touch with institutional investors or private equity firms to get equity finance. Companies can raise money more covertly by using the option instead of going public. In terms of arranging the transaction, settling on the terms, and guaranteeing the regulatory compliance, investment banks are very important. Companies looking to avoid the complexity and the public scrutiny that come with a public offering are specifically fond of this strategy. Investment banks act as a go-between to match the interest of private investors with the financial requirements of the business and private placements, which offer a flexible and customized approach to capital raising. Number 4, equity advisor services. Investment banks provide insightful equity advice services, including strategic counsel on a range of stock-related issues, advice on dividend policies, share buybacks, and stock repurchasing falls under this category. Investment banks use their knowledge of the market to provide insights into investor sentiments and current market conditions. In addition to assisting businesses in making decisions that are in line with their financial goals and the maximization of shareholders' value, they also play an advising function in equity. Investment banks support the overall financial well-being and the prosperity of businesses they advise by providing through advice on equity-related strategy, which helps to strike a balance between capital management and shareholder returns. Market making. Investment banks regularly engage as stock market makers, which helps them to buy and sell shares to actively participate in the secondary market. By increasing the liquidity, this market-making function gives investors a much more comfortable trading environment. Investment banks support smooth transaction and general market stability by continuously providing bid and ask prices, which helps the liquidity. They contribute to closing the gap between the buyers and the sellers, reducing the price volatility and fostering fair market conditions by actively engaging in trading operation. An essential component of the liquidity and the operation of financial market is market making. And investment banks are essential to have proper disciplined stock trading. In conclusion, investment banking serves as the linchpin in facilitating the intricate dance of the debt and equity financing. The profession's expertise is paramount in optimizing capital structure, orchestrating the strategic financial maneuvers, and ensuring seamless access to funding. Investment bankers play a very pivotal role in underwriting securities, advising on optimal financing strategies, and connecting businesses with a diverse array of investors. By expertly navigating the complexities of debt and equity markets, they contribute significantly to the financial health and growth of enterprise. In this dynamic interplay, investment banking emerges as a cornerstone, shaping the financial landscape by forecasting the symbolic relationship between companies and capital which they require for their success. Our journey into financial clarity doesn't end here. Explore our archive of videos for a wealth of knowledge waiting for you. If you found value in our today's video, give it a thumbs up. Subscribe for our future insights and share it with your friends. Remember, the more we learn together, the stronger we become. Thanks for being part of the Finance Fusion, your compass to financial enlightenment.